Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for February 10th, 2013. The year is just flying by for us here. We had a big snowstorm here in the Northeast, and I hope everybody who got affected by it has their power back on and is nice and comfortable, warm back in their homes. The markets last week have continued to rise despite my objections. I have been calling for the market to retrace for the last 2 weeks, and it continues to climb. So let's just take a look at that. Here we have the SPX, and we were consolidating. I was watching the widening range at the top of a trend, at least as I saw it, which technically is a bearish indicator. However, after we started to widen out a little bit, we tightened right back up again. So that tightening kind of took my opinion and threw that out the window. And to further add insult to injury, we had a breakout higher on Friday, which is technically bullish. So we're also getting the moving average up closer to the stock here, which means we do have a little bit of room to run. Our next resistance area is going to be up here at around 1520. Should we break that? Who knows? Maybe we're going for new highs. That would be a pretty good run. We are still due for a retracement, so I haven't given up hope. We do have the president speaking on Tuesday, and typically the Wednesday after that, my understanding is that the market is higher. So we'll see what happens. If we take a look at the Dow was continued to consolidate sideways. It did not break higher like the other indices did. However, there's really nothing bearish here. We had this consolidation open up, and again we start to tighten again, which is more of an indication that the market may start to go forward again or up again. The NDX has broken out of its range and is a little bit higher, and the good old Russell has made new all-time highs once again this week. So one of the levels I've been calling for, even though I have been bearish, and I was expecting the market to retrace prior to doing it, I have been calling for a 920, for the market to hit 920, which I've had this downtrend line here for quite some time, and the reason it was there is because I'm waiting for the market to hit this level and then follow the trend line back down into our support area down here at around 860. So longer term, that's what I'm expecting. I'm expecting the market to eventually peter out and start running back down. The catalyst to that maybe some news with the government with this sequester thing happening. We shall see if that picks up the nerves of the investors or we just continue to buy. All right, let's take a look at our positions. Our February M3 trade is currently sitting in a position that looks like this. I did make some moves on Friday, and what I did is I locked in a very small win here of around $500, around 1%, and I just plan on letting this thing expire if the market happens to back down into my range, which it used to do all the time, but in the last year or so, whenever I've done this, I've just been taking whatever I flatlined out at because the markets have been so bullish recently. There is a possibility it may come down. It doesn't have to drop out that far. Anything under $900, we start making significant money here. So this trade is fine. We just call it a scratch. That's what happens with the M3. If we get a persistent up move, you usually take a scratch, a slight win, or a slight loss. This is the worst environment for the trade. With the grind up into expiration, it just doesn't pull back. Anybody who's been trading this, you should be taking a break even or up to a 5% win or down to a 2% loss, and that would be telling you you're trading it pretty much properly. If you took anything more than that, you probably did something wrong. So just keep that in mind. You should be break even. There's really no excuse to take a big loss this month. Okay, here's what I did. Monday, I had 10 shorts here at 880, and I did an update where I bought 5 880, 890 verticals, which put me with 5 short at 880, 5 short at 890. And on Friday, what I did is I bought 5 880, 900 verticals, which put me 5 short at 890, 5 short at 900. I also sold the 830 call that I had on, and that's what locked in my small profit right here. So for a trade gone bad, this is pretty darn good. I'm completely happy with it. It is the third month in a row we've taken more or less a break even on this. We took a little bit of a loss. I took a little bit of a loss personally last month. I was playing a little bit more bearish. As you know, I have been bearish. This month here, I played it a little bit more neutral and ended up with a very slight gain. Perfectly happy with that. Usually, when you have these trades that go bad, you end up having these really, really nasty losses. This here is quite calm. All right, let's take a look at our February bearish butterfly. Currently, this is sitting with the full triple butterfly, 10 butterflies at 9:30, 10 at 9:10. Oh, not quite full, and I've exited 2 of these at 8:90. I did that on Friday. So the way this works is we've been into expiration guidelines because we're so close to expiration with low volatility. So I'm adjusting this more frequently. We do tend to get chopped back and forth when we're in this position. And Monday, when we had the down move, I did end up pulling off 4 9:30 butterflies. On Tuesday, when we reversed, I ended up buying 2 of those 4 back, and on Friday, I ended up buying the remaining 6 to get myself back up to 10, and then taking off 2 890s. Because we had, again, a break higher, and this is what we ended up with. We are up money now, so we get a couple of calm days, maybe even one calm day early next week, and we may be able to take this off near our low profit target. If not, then we'll probably push it right into expiration, see what we can get out of it. If the market acts up too bad, we'll just exit it at whatever small gain or loss we happen to have. But that's the February bearish butterfly. If we take a look at the March bearish butterfly, there was nothing that had to be done with that trade, and that's just kind of sitting there. It is up money now a little. No, it's a little bit down money. It's still down 260. No problems whatsoever with the trade though. It looks fine, and we started this at 880. Did a delta theta roll to 900. We're due to add at 920, and from there we'll just trade it depending on where the market goes. So this is looking fine. I still like the month. If we take a look at the February rock trade, like the bearish butterfly being right up into expiration, you usually end up doing sometimes you get chopped back and forth a little bit. Early in the week on Monday, I ended up taking off 2 of these 940 butterflies, and on Friday, somebody one of the people who were watching alerted me I had uneven wings on my butterflies. In other words, I had 900 calls here on my 940 butterfly. So I had 40-point wings on the downside, 50-point wings on the upside. So that was an error on my part. That was unintentional. And all I did is I made that correction. So I sold off the 900 calls, bought the 890s to level this off. Being portfolio margined, it doesn't matter. I would have picked it up right away if I was not, because my margin would have been crazy. But that's why that move was done. And on the 8th, which would be Friday, I bought my 2 940s back to straighten my delta out. This is now up $2,300. Not bad in a very low volatility environment that's just kind of been creeping up. And I had a bad entry with this too, because right off the day I entered, I was down $2,000. So now we're up. And this is coming right into here. Probably not a profit target, not a 20% profit target month this month, but very likely at 10%. So this is going well. No complaints there. If we take a look at our V trades, let's take a look at our February V Condor, which I believe is going to be this one. We have a profit of 47.20. I made one adjustment to this, and it was only a protectionary to protect profits. I had this call down here at 870. I rolled it up to 900 in order to take the V out of the Condor. So this position currently looks like this. When the call was at 870, this dropped right down into here. I did not want that, so especially Monday when the market started pulling back, so I sold off the call here. I bought it up here, and this is what the position currently looks like. If we continue to grind up, then we could have a very, very good profit, especially if we end up a little bit higher. And if we come down, then we'll take, what's this profit down here, like $3,500, which is very acceptable for this particular trade. If I grind up a little bit higher, or if I get a chance, well, if the market doesn't gap on us, I may end up rolling this call a little bit higher and taking some more of the risk off. So I could actually come in here and do something like this. And that would raise me even a little bit higher, right? So now instead of taking 3,500, I can take 4,300. I may do that, especially if we're up on Monday or Tuesday. Just come and roll that higher and lock in a little bit more profit. And let's clear that out. Last but not least is our March V trade, which looks like this. We're up 20 to almost 2700. We're negative 50 delta. This is perfect. Data is good. Position looks like this here. And obviously, if we continue to creep up, this will be very, very nice. If we get a little bit more money locked into this, I may start rolling the call to lock some profits in so we don't hit the bottom of the V. We still may come down to only being worth $2,500 or something, but I don't really want to let it come down too far. If it comes down into here and I do nothing, this is all we're going to make here. So what I'll do is I'll roll these back and raise the expiration graph. Wouldn't be surprised if that happens this month because I'm not particularly, all the technical indicators are bullish. I personally am not particularly bullish. I think we may hit 920. That's probably going to be the end of the road for us. All right, so that is all the trades. The markets are still not acting rationally, at least in my view. We continue to go up. Since we've consolidated sideways, it gives us a little more room to go up, so we're not terribly overbought, but we are overbought. Haven't had a healthy retracement in the market in a long time, and the health of the market, they like it. It's a lot more healthy for the uptrend if the market retraces. If it doesn't, that kind of starts to put us in a kind of a dangerous situation where if something comes in that shakes the market, it's going to be really nasty. So let's hope that happens in general. I just feel a lot better when the market acts more neutral. But if it doesn't, that's fine with us. We'll just keep on trading and keep on doing what we're doing. We're making money and all is good. So that's it. Have a great week, everybody. I'll keep you updated with any changes. Thank you and good night.